I'd like to share some differences with you today between a second home and an investment property. And it all comes down to your intention. So what I mean by that is if it's your intention to buy a home and you're going to spend some time there, maybe it's a day, maybe it's a week, maybe it's several weeks, several months, it doesn't matter. You're going to maybe even let your friends and family utilize it for their vacation. And then the rest of the time, you're going to try to maybe Airbnb it to help offset some of your expenses. Even though you're generating a little bit of income there, it's really a second home because you're utilizing it throughout the year for vacations, etc. An investment property, however, is something where your intention is to put a tenant in there, have them sign maybe a 12-month lease. It's a long-term rental property. It's going to generate income for you. That's its purpose. That's its intention. And so really that's the differences between a second home and investment property. So now when you're looking to get financing on these, if you're doing a second home, the minimum down payment is 10%. If you're going to do an investment property, the minimum down payment is 15%. However, I will tell you, it's really cost prohibitive unless you're putting at least 20% down on either one of these, regardless if it's a second home or investment property. The 10% down second home, 15% down investment property, the rate, the points, etc. Again, almost cost prohibitive and not really probably a smart decision. So I would plan on at least 20% down if you're looking to buy one of these types of properties. And if you're able to do more than 20% down, your rates and fees and terms will get even better. So that's just something to kind of keep in mind. A couple other subtle differences. On a second home, you can actually get 6% from the seller in seller concessions if you're putting 10% down to 25%. If you're putting more than 25%, you technically can get a 9% concession from the seller, although that's probably not realistic in today's market. Even 6% is probably not overly realistic, but again, it's what the guidelines allow for. However, on an investment property, the most you can get from the seller to help cover your closing costs is 2%. So your max contribution there from the seller is 2% of the sales price to go towards your closing costs, etc. Couple other differences. A few years back, Fannie Mae and Freddie Mac, they changed what they call the loan level price adjustments. And so now second homes and investment properties are priced more aligned than, say, second homes and primary. A few years ago, before they made this difference, a second home and a primary home were priced very similar. Now, second home and investment property are priced more similar. And so that's a change that's taken place in the last several years from Fannie Mae and Freddie Mac. On an investment property, since it's your sole intention to put a tenant in there and you're going to use it, again, just for income generation, we can even use part of the potential rent that you're going to get on that property to help qualify you. So that's something to keep in mind if your intention is maybe do an investment property. Those are just a few of the differences. If you'd like to get more information on second homes, investments, give us a call, shoot us a text, email. We're always here to assist you. We look forward to helping you. If you found this information helpful, please do me a favor, like and subscribe to our YouTube channel here. You have a great day, and we'll talk to you soon. Bye-bye.